So let's go through the notes on branch accounting. Let's go through branch accounting. First of all, can someone confirm that everything is okay? Now we are back full force. Back mwisho. Is everything okay? And people are done? The video and the audio. John says there is some. The video and the audio. Kindly confirm. Kindly confirm. Video, fine. So I know what to do. I know what to do. Then you confirm. So is the video now okay? Okay now, sawa. Thank you. So let's go through the notes. So before then we go through the notes, please don't confuse between a branch and a subsidiary. A subsidiary is an entity which has been acquired by the parent company. A branch is just an extension. You just extend the same business into a different geographical area, mostly to meet the customer's satisfaction. But a subsidiary is being acquired by the parent. So don't confuse between a branch and a subsidiary. Let's go through the notes. A branch is an extension of the business into a different geographical area in order to meet the customer's needs. What we have said, head office needs to account for all its branches due to the following reasons. So due to the following reasons is what you will be asked by the examiner, that they'll tell you to state the importance or advantages for having branch accounting. Why should the head office be interested to account for its branches? So advantages, importance, reasons for accounting for branches are the following. One, to evaluate the performance of each branch, to enhance transparency and accountability in the branches, for resource allocation to different branches, and for key decision makings. So types of branches which we are going to check. Number one, we have autonomous branches. Autonomous are the independent. Autonomous are independent branches. Independent branches. Then we have local branches. So local, we are going to check the dependent branches. So dependent local branches. These are branches whose books of accounts and transactions are maintained in the head office. So the head office controls all the operations of the branch. So the branch depends on the head office. They don't make any decision without the head office giving them authorization. That is a dependent branch. All the transactions must be authorized from the head office. Characteristics of dependent branches. One, they don't maintain their own books of accounts. Books are maintained in the head office. Kindly note that. All daily sales must be remitted to the head office. So akiuza, all daily sales transferred to the head office. They don't make independent local purchases. All goods are sent from the head office. So mostly they get goods from head office. But in the question, you will find them even getting goods from other branches. Like Moi Avenue can give goods to Kenyatta Avenue. So if that happens, we assume, back in our mind, we assume that head office is the one which has authorized Moi Avenue to transfer their goods to Kenyatta Avenue. So even if from the face, they are not coming directly from the head office, in accounting, we assume that that authorization has been made from head office. Then all cash utilizations must be authorized by head office. The head office maintains the following ledger accounts to keep proper records on behalf of dependent branches. So they maintain what is called branch inventory account. You know, the branch is not maintaining their own books. All books are maintained in the head office. So which are these some of the ledgers which head office maintains on behalf of these branches? One, branch inventory account. This account is maintained by the head office to record the goods that had been sent to the branch and any other transaction related to sale of such goods. This account is maintained at cost plus profit. That is cost plus markup, which is the selling price. So when head office is sending goods to the branch, they record that in what we call branch inventory account. So branch inventory account is maintained at cost plus profit. You cannot maintain that account at cost because to the branch, we must send goods at profit. So you maintain it at cost plus profit. And the profit we are talking of here is markup. Something which we did and which you need to recall is that when you have markup, let's say markup is 1/4, then margin in this case will be, what will be the margin? If markup is 1/4, for example, margin will be what over what? What will be our margin if that is the case? Somebody? Margin will be 1/5. True. So in some questions, the examiner might tell you that they were sending goods at margin. Goods should be sent to the branch at cost plus markup. So when you are given margin, then you will convert margin to markup, in which case you subtract numerator from the denominator. 5 minus 1 is to get 1/4. That will be your markup. We proceed. Next, we have what is called branch markup account or adjustment account. It records the expected profit from the goods that had been sent to the branch. The balancing figure in this account represents gross profit margin realized. So branch markup account, it does not record the value of the goods, it records the profits. So it records the expected profit in those goods. So you have sent the cost to the head office was 500. They have sent them at 550. So markup account will record only the 50. So markup account records the profits. Goods sent to branch account. This is an account of the head office. So this one is not for the branch. It's account of the head office, which records the cost of goods sent to the branch. So goods sent to branch is purely, put it in brackets somewhere there, popularly known as GSTB. Mostly we call it GSTB, goods sent to branch account, GSTB account. So it records the cost. So markup up there record the profit. This one records the cost. It means GSTB account plus branch markup account will give you what is appearing in the branch inventory. Because branch inventory records cost plus profits. Then markup takes only the profits. GSTB takes only the cost. So GSTB plus markup account should give you what should appear in the inventory account. Then branch debtors or receivable account, it records all the credit sales to third parties. Okay. The balancing figure represents the total credit sales made by the branch during the period. Sawa. Branch cash account, this is an account which records all the cash receipts and payments made by the branch. Balancing figure represents the cash. sales. So nothing much. What I want us to do an illustration. I want us to do an illustration. Yeah, I want us to do an illustration. So I shared with you a handout. There's a handout I've shared with you. What I want you to master before we go to that handout, and I want to share that handout on the screen. When you are given margin, let's say margin is 1/3, you need to convert this to markup. Markup is 1/2. Margin is always above markup, so you reduce it. Above markup, so you just take numerator, you subtract from denominator to come to markup. Goods are sent to branch at cost plus markup. So sometimes the examiner can be malicious. They don't want to give you markup, they give you margin. So you have to convert the margin to markup, then you send those goods. So right there, illustration. I want to share on the screen so that you don't have to go to your groups there. Just a minute, I share. I can share this on your screen. Wait a minute. So I hope everyone knows how to multitask when I share the screen. So when I do share the screen, what you do, I'm just assuming, you might not know someone has not how to task the tool. When you want the question which I've shared, you double tap on that screen share, which is the question. When we are doing the question here, you double tap the board. So you have the tool to multitask on the board and the question. So it's just double tapping. If you want when we are reading the question, double tap on the question. If you're reading a board, you double tap the board. You have the tool on your screen. So I want to read that question. I want to read the question. It says, Sellwell Limited has a head office in Nairobi and 2 branches in Meru and Eldoret. The head office sends goods to Meru and Eldoret at a markup of 1/4 and at a profit margin of 1/4 respectively. So tuanze hapo, profit analysis. Profit analysis. Profit analysis. So right here, markup, margin. right? Their markup margin. So we have Meru and we have Eldoret. So we have Meru and we have Eldoret. We have Meru, then we have Eldoret. Have those two. Pass. So they are saying, we'll go back to the paper. The head office sends goods to Meru and Eldoret at a markup. So Meru is a markup 1/4. So if markup is 1/4, margin will be 1/5. Then Eldoret, they are selling at a margin of 1/4, based on what they have said. Here they are selling at 1/4. It means markup is 1/3. Please, if you have not understood what has happened, just ask. Just ask in case. Here, I can repeat once more. Here we were given markup of 1/4. So in case hapo mbele tutahitaji margin will be 1/5. But this other side, we were given margin of 1/4. So if margin is 1/4, it means markup is 1/3. Let's continue reading. Let's continue reading. The following transactions took place during the period. So Meru, we have Meru and Eldoret. So opening inventory, 1010, goods sent to branch, goods received by customers to head office, cash received from debtors, discount allowed, bad debts written off, cash remittance, expenses paid by the branch, cash balance, debtors balances, cash balance, debtors balances. So cash and debtors, there was opening and closing, opening and closing. Don't ask yourself, why are there so many? Additional information, during the month, goods that had cost the head office 4,500 were transferred from Eldoret to Meru. So there are some goods which were removed from Eldoret, then they were transferred to Meru. Cash worth too were transferred from Eldoret to Meru as well. Meru branch returned goods worth 3,000 to head office. No problem. Required down there. Required branch inventory account. So for each branch, prepare inventory account, markup account, branch debtors account, then branch cash account. Yes, those are what they want us to prepare. So now, we can start. There's nothing which can bar me from starting. We can start with the branch inventory account. Branch inventory account. branch inventory account. So they want for each branch. So instead of having them one by one, that you prepare Meru, then this, there will be so many. By the time you are finishing all those accounts, they can consume even 3 pages. So what we can do, we combine them in same account. So have here, because of the space of my board, I'm suspecting I'm going to have a challenge because there's something I want you to do for me. I want to show you how to do the branch inventory. Then you will draw it. You will draw all of them, the 4. You will draw for me all the 4. But I'll start with the last 2, branch debtors and branch cash account. So that because this one will require those cash account and debtors accounts, those 2, for you to close this account. But now you see when I draw all this, then I go to all that, my board will not allow me. So I want to show you how to draw it. Then you will draw all the 4 of them, all the 4. Then we start filling in one by one. That will work. So branch inventory, you do this. You can separate them by saying here Meru, Eldoret. Meru, Eldoret, Meru. Like that. So have something of that nature in shillings. Have something like that. So what I want you to do for me, I want you to have 4 of them. Check the second one. The second one is branch markup account, branch debtors account, and branch cash account. The only question will be what space. So space, leave like, let me see the number of transactions here. Leave like inventory, leave like 7 lines. 1, 2, 3, 4, 5, 6, 7. Then you draw the second one. Sorry, you draw the second one. So for the first one, leave 7 lines. Then you draw the other one. Then that other one, the same 7. For all of them, leave 7, 7. So you draw them, then you count 7, then you draw the next one. So once you are done, can you tell me? Because I want you to start with the last 2. You will require those last 2. You will require the last 2 to prepare inventory account. So kindly draw all the 4. In each, you leave 7 lines. Ivo. Once you are done, tell me. If 4 people tells me that they are done, then I will start off. Process done, drawing on the 4. Waiting for others. Branch is done. So it seems people are done. So I want us to start with ile ya chini kabisa, branch cash account. I want us to start with that. So let's record branch cash account. So I want to convert this one to cash. So you go to the last one, branch cash account. Branch cash account. So cash account, balance brought down. Balance brought down in the cash account. Check in the schedule there. Cash on 1st September. You see 2 and 1 on what I've shared there. There is cash on 1st September, 2 and 1. So you debit the cash book, 2 and 1. 2 and 1. Then carry down, you leave it for now. Bring any other thing which can affect cash. So check from top down. Inventory, no. Goods, no. Goods, no. Cash received from debtors. Check the schedule. Cash received from debtors. You debit the cash book. So debtors gave us inflow. Inflow of cash you debit 16,800. 16,800, 14,200. 14,200. Good. Then we have discount, no, bad debts, no, cash remittance. Cash remittance means they are taking cash to the head office. So you credit the cash book. Remittance is whatever they have sold, they take them to the head office. So remittance, cash remittance, 28,385. 28,385. 23,715. I hope you are seeing those figures. Then there is expenses paid by the branch. So expenses paid, you credit. Expenses paid. So expenses paid 9 and 3. 9, then 3. Cash debtors. Let's go to the additional information. Additional information number 2, cash worth 2 was transferred from Eldoret to Meru. So to Meru, you remove it from Eldoret. Then from Eldoret, you bring it to Meru, 2,000. So what you call the contra. So credit where it is coming from. So remove it from Eldoret, then bring it to Meru. Only those transactions affect cash. So you go to the balance carried down. Balance carried down. We were given on 30th September, we were told cash balance on 30th, it is September or October. It's supposed to be September, not October. 1 and 5. So this one was 1,000, this was 500, like that. So already we have been given balance carried down. You know, when you are given the balance carried down, it means this side and this side should tally. But when you add, you will realize that it is not tallying, it is not in agreement. So what you do, your balancing figure, check this side, subtract here. Your balancing figure is cash sales. They sold some cash, that is your balancing figure. That is what you are not being given. So can you work that to tell me how much are the cash sales for each? For cash sales is the balancing figure in cash account. That is what we were not being given. So add this side, subtract. The balancing figure is cash sales. So give me the two figures. So this cash sales will go to sales account, to inventory, sorry. Daniel has 17,585, then 14,015. So someone can confirm. Daniel is saying 17,585, then 14,015. 14,015. One person to confirm, then we just proceed. It will mean that we are together. Can someone confirm those figures? Yeah, so Brent has confirmed. So what you do for me, hey, let's be here, starting to actually humor. What you do for me, take these figures, unaona tukiuza stock, it means stock, you know, stock is an asset. So it's also debited in the branch inventory account. Branch inventory account is debited with the stock available. But when you sell stock, you are supposed to credit the stock account. So with these figures, go to your inventory account. Up there, your first account, I will come with it later. Go on the credit. You credit with this. You say cash sales. Cash sales, you credit branch inventory account with this and this. Do that, you credit because stock has gone out. So go to your branch inventory account, then credit with these two. When you sell goods, you remove them. Now, I hope that is done. Let's go to branch debtors account. Here, the second last, debtors. So, branch debtors account. Already you have drawn them, so debtors. Branch debtors accounts. So debtors, there was balance brought down. Check on first. Check from the screen share. There was debtors balance on 1st September. So balance brought down debtors 840, 600. 840, 600. Have that. Carry down, you can hold it for now. Then let's check top down. Top down. Inventory, no. Goods, no. Check number 3 from top. Goods returned by customers to head office. So when they return, you're not supposed to tell them to pay. So returns, they have returned. Even if they return to another branch, you eliminate, you go and sort out yourself with that other branch. So that is 180, 150. 180, 150. Cash received from debtors. When debtors pays you, debit your cash book, which we have done, credit debtors account. So cash payment, they have already paid. They have paid 16,800. They have paid, how much is this? 14,200. 14,200. Discount allowed, you credit customers. When you give customers discount, you credit their account. So discount allowed, 360 and 270. 360 and 270. Then bad debts written off, 90, 105. So bad debts, 90, 105. Then cash, no. Expenses, no. Nothing. So we only have the debtors balance. The closing debtors balance is what is remaining. Is the last item there. Balance carried down. This is 1,200. And we have 860. So the balancing figure here, because we don't get it balancing, for balancing figure here is credit. Credit sales. Credit sales is your balancing figure. So can you work that out? Work that out and tell me those balances. So you add this side up to carry down, then you subtract this, you'll get the credit sales. So give me that figure. Those two figures, sorry. Give me those two figures. So the answers have been given by Abby, confirmed by Daniel, and Brent has also confirmed. 17,790. 17,790. Then the other one is 14,985. 14,985. This, whether you're selling in cash or on credit, the fact remains your stock is going down. So go and credit. Go and credit your branch inventory up there. Go and credit sales. You say credit sales, you credit with this, that. I hope you are doing that. Go and credit them up there. If there is no question, then allow me to come up with branch inventory account. Branch inventory account. Branch inventory account must come before markup account. So I will delete this. So with you, you have them, so just wait for me. So I would have said have that, but I know you have it. So we just start. Let's start with inventory. Let's start with inventory. Balance is brought forward. So balance brought down. I've seen 1010. So in the stock account, stock available must be on the debit side. Then let's go to the schedule there. After inventory opening, goods sent to branch, you will debit the branch account. So goods sent to branch, that is 50-40. 50-40. Before I bring any other thing, let me bring the two items you brought here. There was cash sales, and also there was credit sales. So let me just retrieve your answers so that I can know which is which. There was 17,585. This was cash. 17,585. And the other side was 14,015. Then credit sales, 17,790. Then 14,985. Like that. So those ones you must have credited. So I should not wait for you to do it. We just go back to the schedule. So after goods, cash, no. Discount, no. Bad debts, no. Cash, no. Expenses, no. Cash, no. Debtors, cash, debtors, nothing. We only go to note number 1. We go to note 1. During the month, goods that had cost the head office 45 was transferred to Eldoret. Hold that one kidogo 2. Let's go to note 3. I'm checking. Note 3, Meru branch returned goods worth 3 to head office. So to head office, Meru, which are returned? Meru. So Meru returned goods worth 3 to the head office. So you credit that. Then John, Meru was 12,585 cash. Meru, please confirm this. John is saying this one was supposed to be 12, not 17. Kindly confirm, someone to confirm what John is saying, that in the cash account, this one was 12,585, not 17. Can you people confirm the balancing figure in the cash account which you brought here? Daniel amekata. Ratio says it was 17. Another person, so 2 people are saying 17. One more, ndio nijue kama John angalia side yake. Was it 12 or 17? Joseph, 17. So it means John, Ibrahim also says it is 17. So John, check your side. Or I'll tell, yes, or I tell someone to share with you, maybe kuna kitu haukuandika vizuri. So it was 17. Sawa. So that one has been checked out. So the only entry remaining is this note number 1. During the month, and I want to be very thorough there, it is not that easy. During the month, goods that had costed office 45 were transferred from Eldoret to Meru. Those goods were in Eldoret. So we need to credit Eldoret, then we debit Meru. But we are not going to do it at that amount of 45. So say here to Meru. So we have to post. They were transferred from Eldoret. They are going to Meru. Then from Eldoret. You know, these goods, they are saying they had cost head office. Rule number one, if they had cost head office, they were not recorded. They were not recorded here at cost. Branch accounts can never be recorded at cost. They are recorded at selling price. Selling price means cost plus markup. Cost plus markup. So these goods are already the goods which we have recorded are at cost plus markup. But here they are saying the goods which they are removing had cost head office. So you must check those goods. They are on the debit side of Eldoret. What price were they recorded here? So when you go back to the profit policy, Eldoret, goods are being sent out. What was the markup? What was the markup to Eldoret? Kindly check for me. What was the markup to Eldoret from our profit analysis? A third. So Eldoret, goods were being sent at a profit of a third. So that one means in Eldoret, these goods were recorded at 45 plus 45 times a third. 45 times a third is 1,500. Well, 1,500 plus this is 6,000. You need, yes, 45 divided by 3. Yes, that is 15. So it means in Eldoret, these goods were recorded at a selling price of 6. So what you need to eliminate from Eldoret is 6, not 45. You remove 6. Haya, zimebebwa na lori zikienda Meru. Meru zikifika, zinafika as the policy of the head office. So policy of head office in Meru, those goods will be received at 45. We assume it has been authorized by head office. 45 plus 45 times. What was the markup in Meru? Meru markup was? What was the markup in Meru? So you receive as per your markup a quarter. So Meru will receive goods at what value? Can you add? Add. $56.25. 56.25. So come here, remove it in Meru, bring it to Meru, 56.25. We are done. So give me the balances carried down. That is the end. Give me these two balances. Give me those two balances. Share with me the answers. Share with me the answers. So people have reconciled amongst themselves to be 27 to 50, 27 to 50, and the other one to be 15,000. So those are the figures, unless someone is disputing any. Now, markup account. This one is at the profit account. Wacha niinue huko juu, inakaa iko chini sana. But that will be a waste of time. Wacha tu ikae hapa kwenye iko. Let it just be there. I just use my camera. Now, this account, and listen carefully. It records the expected profit and the unrealized profit. So the main markup is just to confuse you. It is recorded at gross profit margin, and I'm going to prove to you how. Check here. Meru opening stock. I need to check in this opening stock of 10 and in this opening stock of 10. How much profit am I expecting here? How much profit am I expecting here? So I will come here and say balance brought down. Balance brought down. This 10, remember the 10 is cost plus markup. So you need to remove the markup. Remember that. So you will come and say, Meru, we have 10. 10 is all inclusive. What was the markup? What was the markup in Meru? Kindly, somebody. I keep on forgetting those things. Markup in Meru was 1/4. So it means 1/4 in percentage form, it comes to, what is 1/4 in percentage? It will be easier for me to work with percentage. 1/4 in percentage is what percentage? 25%. Thank you. So it means this 10 were at 125%, because cost is always 100. Cost is always 100%. So if they are selling at cost plus the markup, then it means these goods are at 125. But here we only want the profits. Markup only we record the profit element. So you come and say, what about 25%? So it will be 25 over 125 times 10. So doing that for all of them will be a complete waste of time. You know what you should know, this account is recorded at margin. So markup was 1/4. It means margin in Meru is 1/5. Margin in Meru is 1/5, which you can see here. 25 over 125. That is 1/5. So it is easier to work with 1/5. Kila kitu na divide na 5, 5, 5, 5, 5. Then in Eldoret, what was the margin? Just work with margin. Stop wasting a lot of time. What was the margin? Tell me the margin direct. What was the margin in Eldoret? What was the margin in Eldoret? 1/4. So here, just work with 1/4. If you work with markup, it's going to take you a long route of going to 25, divide by what? You just go straight to margin. The name markup does not mean you record that mark. Just use the margin, the profit margin. It will be very easy. So let's kick off. So Meru, everything for Meru you divide by 5. Everything for Eldoret you divide by 4. So this account is prepared against the stock account. I want you to be practical. Angalia pale kwa store. Pale kwa store. There are goods which we have received from the head office. So this account want to check what is the total expected profit. And remember, profit account is credited. So we credit this account. So the items, we do it against the items which are in the store. These are the goods in the store. So you check the profits which are here, then you credit them in this account. So 10 divided by 5 is 20. Then 10 divided by 4 is 25. So in the opening stock, we are expecting those two profits. Goods from head office, So goods from head office, 50 divided by 5. We are expecting a profit of 10. 40 divided by 4. We are expecting a profit of 10. From Eldoret, from LD, 56.25 divided by 5. We are expecting a profit of 11.25. So for the goods we have in the store, these are the profits which we expect. So have that, unless you are on a swali. So, meaning overstate 2,000 and 2,500. Thank you. This is 2,000. 2,025, 10, 10, 11.25. Thank you. That one, my students, na leo mko fresh, I don't know, or ama mmesoma sana exam mekaribia. Then there is what we call unrealized. Ile mnasemanga UPI, unrealized profit on inventory. The ones which you don't expect to realize, you debit this account. So you check this side. Profit on sales, when you sell, we assume profit has been realized. So you don't assess unrealized profit on sales, leave it alone. But the one which went to Meru, to head office, sorry, back to head office, you will take 3,000 divided by 5. There is a profit we have lost of 600. But when you sell, the profit is assumed to have been realized. So don't assess the profit, don't check the profit on sales. Meru Eldoret, tumepoteza profit of 1,500. Tumepoteza profit of 1,500. Then there is one which is not part of this. Kuna profit ingine tulipoteza mahali, lakini haiko hapa. The one which went back to direct. Kuna customers wengine walipeleka goods direct to head office. Walikuwa na kimbelembele. So those profits tumepoteza. Tuliwauzia expecting the profit in sales, but wao wakachukua goods wakapeleka head office. So returns by customers. So returns by customers. Andika in full. Returns by customers. Hebu mfanye hizo mbili munipe answers. I've even forgotten those figures, but I can check from this schedule. Returns by customers. Where is it? Number 1, 2, 3. Number 3 from top, 180 and 150. Assess for me the profits in those two. You give me 180 and 150. 180 and 150. And tell me what you are getting. Daniel, 36 and 37.5. 36 and 37.5. Can somebody confirm? So 180 divided by 5. That is true. That is 36. Then 150 divided by 4. 37.5. Yes, they are correct. Higher. Then leave one space upper. Ruka like moja. Then balance carried down. Balance carried down. Na hii balance carried down watu wanabidi kujiuliza. Balance carried down is based on this. The remaining stock in the store. Zile stocks zimebaki kwa store. This one and this one. So just the same thing. Take this, divide by 5. Take this, divide by 4. Give me those answers. So this is the UPI at the end of the year. And realized profit on inventory. The closing. So it is based on the closing stock in the store. So take this by 5 by 5. Give me the two answers. So my students are getting 5450, 3750 confirmed. 5450 and 3750. Correct. So now, John, bad debts affects only the debtors. Bad debts will not affect the markup at all. Wakikataa kulipa, hiyo ni expense, imeenda hivyo. Bad debts cannot affect the markup account. Never. Umepoteza yote. So, wewe, hiyo utapeleka kama expense. Because after this, we are getting gross profit. So after gross profit, John, hapa ni gross profit realized. From gross profit tunaenda P&L, less expenses. Bad debts wanaingia hapo chini. So it will not go to the markup. It will not affect the markup account at all. So the balancing figure, you will take this side, add this, that, minus this side, the same thing. Then the balancing figure here, my space is a problem, is GP, gross profit realized. I work in bracket, I know you have enough space, put in bracket, balancing figure. Gross profit realized, balancing figure. So you will help me with the balances now. This one and this one, and that will mark the end of the question. So Daniel has given me the figures. Daniel, hapa leo wewe ulikuwa father. John umeandika nini hiyo? 7039. Which language is that? 7039. Then this is 7212.5. 7212.5. John, which language is that? Kuna language umeandika hapo sielewi. Oh, sawa. Okay. Sawa Daniel. Anybody with a question? Before we go to the next question, we have the next question. Anybody with a question? Five-minute prayers, that one has no problem at all. I just want to confirm the next question. It is there in the handout, but if we have it in the past paper, then there is no need of the handout. The next question is this one, September 2015. September 2015. September 2015. Question number 3. We'll check whether you have it. Check if you have September 2015. Question 3. In your papers. September 2015. Yes, I have it. Mine has it, page 100. Can some people confirm? Kama iko nitoe screen share. Can you confirm if you have it, please? Confirm whether you have September 2015, page 100. page 100 in your past papers. Rose confirms. So many people seem to have it. Like I tend to believe kila mtu ako nayo. Kama mtu anasema. So what I will stop screen share. Then we take 5 minutes for prayers. We come and finish that question. That was my target. Tukimaliza hiyo class imeisha. That is my target. That's September 2015. So let's go for prayers, then come back. So Ibrahim is back. Ibrahim is back. So let's read that question. Also, from my program, you know, it's good to share programs. From my program, where's my pen? From my program, our class will come to an end on 17th of this month. On 17th. So prepare yourself accordingly. On 17th, nitaachilia. I'll leave you on 17th. So make sure unasoma kabisa. Alright, so let's go for this question. September 2015. Question 3. Page 100. So I read. Enumerate 4 characteristics enhancing qualities, quantitative characteristics of good financial information. That has nothing to do with this topic, but if you need them, you can write. You know them, actually you know them, the qualities of financial information. We have reliability. We have reliability. Which other one? They are the 2 basics. We have the reliability, relevance, reliability, relevance, understandability, comparability. Mimi nimesema hizo 4, those 4 T's. Well, ongeza hizo zingine. There are so many. Neutrality, among others. Those are the characteristics of good financial information. Falcon Limited deals in Italian shoes. It has a head office in Westlands, Nairobi, and branches in several parts of the city. Accounts of all branches are maintained in the head office books. The following information relates to transactions carried out by the Eastland branch for the year ended 31st December 2014. The amounts are stated at selling price. So we have opening inventory, goods received from head office, goods received from Southland branch, goods sent to Northland branch from Eastland branch, goods returned to Eastland branch by credit customers, goods returned to Northland branch by an Eastland branch customer, goods returned to head office, goods stolen from Eastland branch, cash sales, credit sales. Goods were marked at a normal markup of 3/5. To clear some of the old stock, goods with a normal selling price of 3 million were marked down by 20%. Markdown is just the reduction in price. Markdown is the reduction in price. So let it not bring a lot of issues, because you see markup is increased. So when you mark down, it means it's like a discount. You are reducing the prices of goods, but don't treat it as discount per se. 2/3 of these goods had been sold by 31st December 2014. Other than the goods stolen, there were no shortages or surplus of goods in the year. Required Eastland branch inventory account, 6 marks. Eastland branch markup account, 6 marks. Goods sent to Eastland branch account. So that's the one we never had in that other question. So this is just one branch, which is going to make our work very easy. So over here, Eastland branch inventory account. Eastland branch inventory account. So have it that way. So shillings are in thousands. Have that. We can start that one. Here in Ashida, we can start opening. They have said the amount as stated as selling price. It means at the way the branch will tell them, cost plus markup. So we start balance brought down. So balance brought down is 31,680. Goods received from head office. Goods received from head office. Markers on a abbreviation. Goods received from head office, 700, 368. Goods received from Southland land. They have received from Southland. So from S-land, Southland of Malaysia, the markup was uniform to all of them. So it's just okay. There is no like interchanging the figures like ile. So from Southland, 3360. Goods sent to Northland branch from Eastland. So Eastland wametuma goods inaenda huko Northland. Sure. So to Northland, when goods leave, you credit. So to Northland, 4320. Then goods returned to Eastland branch by customer. When a customer si kama ule mwingine alipeleka head office, this one's returned to us. So return them in the store. So returns 1932. Goods returned to head office. To head office, 8160. Goods stolen from Eastland. Stolen goods. Goods stolen, 5760. Cash sales. Cash sales, 316,800. Credit sales. Credit sales, 370,116. Unaona hiyo note 2, naona watu walikuwa nayo na issue. Hakuna issue hapo. 5280, what's the issue? Goods returned to Eastland branch by credit customers. Oh, 52, this is 52, 5280. Na hii basi 1932 tumepeleka hapa. 1932 should be goods return to Northland branch. Goods return to Northland branch by Eastland branch customer. Hiyo haitaki. Kuna customer wetu, hiyo 1932. There is our customer who return goods to another branch. Nafaa chapwe kiboko. But it can be possible. Because kama uko Kitale, na umenunua goods hapa Nairobi, kufika Kitale unapata supermarket the same, unapata those goods are not the same. Goods ni mbaya, utarudisha kwa hiyo branch yao. By the way, to that effect, let me know from where people are attending classes. Attending classes from where? We are attending from Machakos County. Where are people attending classes from? It's good to know. Daniel ako Kiambu. We are in Machakos County. Kiambu County. The rest, where are you attending the classes from? At least we can see the struggle people are, the effort people are putting. Karen ako Machakos, Karen hapa pamoja, Kitengela si huku tu Machakos. Chris ako Nyeri. Naivasha is too cold. Gladys, Naivasha could be, if Naivasha cold, hapana, Limuru inakuanga very cold. Naivasha utakuja huko next year. Joseph ako bypass. Joseph, wewe tukienda class tunaweza patana hapo Kamakis tukule nyama. It's just, I just take like 8 minutes drive. Nafika hapo. So at least mtu mmoja naona kwa Nairobi, Rosa ako Kiambu. Wali Nairobi ina watu wengi. Dickson ako Luanda, Vihiga. Those are so many kilometers, almost 600. How many kilometers, Dickson, from Nairobi to Vihiga? It should be around 400. How many kilometers? 600. Yes, I was almost there. 600 kilometers. 600 kilometers. Ukienda 80 kilometers per hour. 80 kilometers per hour. We take 600 kilometers divided by 80. Prepare for 8 hours drive. So mko na Mildred pia ako huko. So Dickson tafuta Mildred. Mnaweza form discussion group. Mildred is also around there. That was a small break. Otherwise, unless you have a question, lakini kuna watu wako kwa account yenye hawajui. Abigail, Consolata, nyinyi hamjui kwenye mko, si ndio? If kuna watu wanatuma direct message. I was checking note number 2. Sawa Abigail. Check note 2. Check note 2. To clear some old stock, goods with a normal selling price of 3 million were marked down by 20%. Markdown is reduction in price. So you come here and say markdown. Unajua stock ni ile kitu physical unaona, but what we are recording is the value of the stock. So when you mark it down, unajua tukizipokea we see them at these values. When you mark down, it means you are reducing the price of those goods. So markdown is 20% times the value was 3 million. Is that 600? I think that is 600. 20% of 3 should be 600. So when you see markdown, you reduce the goods. Then 2/3 of these goods had been sold. So hapo kwa 2/3 inaona watu wanakuwa na issues. No. If they have been sold, then it means they are part of either credit or cash sales. So they are already included there. Don't complicate the issues. So balance carried down. Balance carried down. Actually, the reason I'm trying to listen kwenye mko, yesterday I just realized there is one of my students who has really been suffering without me knowing. Section 5. Like now, I'm supposed to have them in the evening from 6 p.m. to 8 p.m. Not only to realize that this student, wherever she's studying from, tukiwa na class at 6 p.m, kwenye yako ni 3 a.m. Tokyo, Japan. I was really surprised. So nini anaamka 3 a.m. That is, so ndio nikaona vile tunaweza saidiana. Lakini nimegundua nyinyi wote we are local. So hakuna a big concern as to that. When we had the class with them in the morning when we had class at around 8 a.m., she was telling me in Japan, it was 3:30 p.m. So sasa hata labda anafikiria kulala. Yarudi kwa hiyo class ya 6 jioni. Utafika wapi wewe Daniel? Unataka kufika kwenye watu wanasoma kama wamelala? Kama unafikiria ni mzuri kwako? That is a lot of sacrifice. Give me the balance carried down. But you people will pass. The dedication maker is on another level. In fact, I never expected that you can come on Sunday. But it's almost class is full. Kenya imekuwa ngumu. But Mungu yuko. So balance carried down. Give me the balancing figure. $34,932. Thank you. Have that. We go to Roman 2. Roman 2, I want to do it this side. Eastland branch markup account. You know, the beauty of these things, anything you post here will be marked as correct or wrong. So we post to, hata kama zingine ni mbaya, haina shida, bora we post correct. Provided you know what goes on the debit. When goods are flowing in, you debit. Out, you credit. Markup account. Markup account is going to check profits. Check note number 1. Please check note 1. Check additional information number 1. Goods were marked at a normal markup of 3/5. So if markup was 3/5, this account niliwaambia unaweka at margin. So if markup is 3/5, margin will be what fraction? 3/5. Margin cannot be 5/8. The less ample, Daniel. If markup is 3/5, ratio, it can't be 3/6. John, yes, it is 3/8. Numerator remains constant. So ratio, I know what you have done. Wewe kazi yako ni kuongeza tu, unaongezanga moja. Hapana, you add the numerator to the denominator. See that you add 1 to the denominator. You know the ones we have been using, hata kwa group, most of numerator ilikuwanga 1, 1, 1. So you add numerator to denominator, CO 1 to denominator. So you take, numerator remains constant, but you add that ukushini. So margin from this account is going to be maintained at 3/8. 3/8, like that. 3/8, 3/8. So this account is highly checking this account. It's focusing on this. What profit are we expecting? That is how you go about it. So the balance brought down. So brought down, take 3/8 times 31,680. I will rely on your figures. $11,880. There. Goods from head office. Check the profit, expected profit, goods from head office, or goods received from head office. 700, 368, 3/8. How much? Mnachelewa? Umekaa sana kwa hiyo, sijui kwa nini. Ama hii 3/8 in fraction itakuwa ngapi ndio tujue hiyo fraction. Tusongange nayo mbio mbio. 3 divided by 8, 0.375. So utakuwa unachukuanga 0.375 times. So 262, 636, 638, 638. Then from Southland, from Southland, 3360. Confirm my answer. 1260. Returns 5280 times 0.375, 1980. Are my answers accurate? Yes, Daniel has given me all that, so they are the same as mine. Haya, tunarudi hii side. To Northland. Don't expect to realize that profit. To Northland, 0.375 times 4320. Please don't copy my answers. 1620. So the unrealized, those are the unrealized profits. To head office, back to head office. To head office, 8160 times 375, 3060. 3060. Stolen 5760 times 375. Then the difference utapeleka kama expense. 5760 times 375, 2160. Don't assess profits on sales, the two sales. Mark down. When you mark down, you don't assess your check. Because inakwanga hivi, check here. Unaona kuchukua hiyo profit margin 0.375 times the entire 3000. Hebu chukua hii 3000 times the profits. The profit is 3/8. It comes to 1125. So it means in the entire 3 you are expecting a profit of 11. So you marking it down by 600, it simply means you have reduced your profit, the expected profit. So always mark down, you find that the profit is what you are just reducing your profit. So you don't assess unrealized profit on markdown. Your check is always profit which you write off. Then customers returns to Northland. Kuna customer alipeleka goods Northland. Ile 1932, please check it. There's a customer who took some goods direct to Northland. Nakatulia. So you will take 1932 and 38. So 0.375 by 1932, 724. 0.5. Skip one line. Balance carried down You take this balance, 34,932 by 3/8, like that. So 375 by 34,932. 13,099.5. I hope my answers are quite accurate. So your balancing figure here is the gross profit realized. Gross profit realized. That is the balancing figure. So I want you to give me the balancing figure, then that account is done. Give me that figure there. Si kitu ngumu ikikuja kwa mtihani. Nani ako na hiyo balancing? Those 25, 6, 25, 25, 64, 94. Can somebody second what Rose has given? Then we proceed. Consolat has confirmed. Thank you. Now, we are going to this account, the goods sent to branch. So goods sent to branch, this is now not an account for the branch. It's an account of the head office. Wakituma goods, they recorded that account. So, okay, there's this disconnect which you need to understand. All these books, even these ones, are maintained in the head office. These are they are dependent branches. So, but head office maintains these books as if they are the branch. Like goods sent to head office. So on a debit account as if they are receiving. So there is someone in the head office is acting like the branch, is recording like the branch, but it's the head office. Then now there is head office book. Ukituma goods kwa branch, you debit branch account. Then you credit. Unatoa kwa stock ya head office. So goods sent to branch is a head office books, where goods which have been sent to the branch is credited to reduce stock in the head office. Something unique about it is very funny account. It doesn't record everything like this one. It only records goods sent to the branch, either from head office or from other branches. Goods which have been returned by branch to head office or have been returned to the branch from other branches. Master that. Goods sent to branch only records goods sent to the branch from head office or from other branches, or goods returned by the branch to head office or returned to the other branch or sent to other branches only. Then, because it is a book of head office, it is recorded at cost. So you record that account at cost. In this case here, the profit is 3/8. The profit is 3/8. Or that is what you are saying. So the cost, if profit is 3/8, the cost will be 5/8. Because 3/8 means 8/8 minus 3/8. So cost is 5/8. So that account is maintained at cost. So that when you add it, when you add the 5/8 plus 3/8, you will get these balances which are here. Let's present it here. So right there, goods sent to branch. Well, oh yeah, sorry, it was out. So goods sent to branch. Goods sent to branch account. Goods sent to branch accounts. Goods sent to branch accounts. But then if we play our cards well, by Sunday next week, we should be done. You are clear. So I'll see how to play those cards. So here. Theory. I hope everyone has theory handout. Please soma hiyo kitu. There's a lady, because I hope hakuna mtu anamjua. She's also called Gladys. So it's not just Gladys. Aliniambia last semester she got questions of 20 clean marks from that same handout. Na alipita. So usicheze na hizo theory. Soma kabisa. Kama mna cramming wimbo ya sijui Diamond and the rest, kwani cram your handout for 2 weeks. Then you got them pia where? Kwani mtihani imesha kuja. Nianze kujisumbua, you bring it here tumalizane. Ama you got them pia where? So be ready. Be ready. This account is going at 5/8. Cost. 5/8 cost. Oh yeah, sawa. This is also cost. So please read that handout thoroughly. I assure you, unless examiner anakuwa na some malice. Kuna malice sometimes wanakuwa nazo, wanaleta kitu hata wao wajui. Wanakuletea tu ya kusumbua kichwa. Kama ile tulikuwa tunaangalia jana ya bottom, sijui ilikuwa triple bottom, sijui what. Those ones. Unless something like that which inasumbua tu kichwa. But ideally, the normal questions zitatoka hapo. And the only route we have is to share and you read. Each time I taught you know, we used to teach this thing initially tulikuwa tunafundanga na 6 months. Nowadays iko 3, lakini alifiki 3 vizuri. It is like 2 months. It's very difficult. The far is very wide. So if you can read those ones, because you see the effort we are putting, na bado hiki tunaweka shida. FR is very wide, very. Haya. Inafika wakati mwalimu anasema sasa tumefanya 80%, hiyo topic moja ikikuja sio swali peke yake. Alafu unakutana nayo question 1. That one can make you fail. So with us we are doing everything. All the topics. Haya. So this is how you do this account. You bring goods. When you send goods to the branch, you debit branch account, stock account, you credit this account at cost. So it will record this one. It will record 1, 2. Those 2. Goods sent to the branch during the year, then from Southland. It checks goods which went to the branch from this side of this side. This side is head office, this side is other branches. You bring there. Then you will debit it with the goods we took out from our side, not through sales, But what are branches? To Northland and to head office. Only those two. So we'll have these two this side and these two this other side. So we say goods to branch, goods sent to branch, goods sent to branch. It will be 5/8 times this value, 700, 368. 700, 368. Tell me what you are getting. Tell me what you are getting. How much? I think umeshapata figure sikuona. Let me check back. One two same. 437, 437, 437, 730. Then from Southland, you will take 5/8 by 3360. So those are the fresh goods which came in that branch. The fresh goods which came in that branch, so you just check their costs. Their costs is what you check. 2100. 21. Then you come this side. The ones out of what you received this year, to Northland, 4320, 5/8. To head office, 8160, 3/8. Give me those two. You can give me the two in form of commas. $27 and $51. Right. So now give me the balancing figure. So skip one line, then you say balance carried down. This one here. 34,932 by 5/8. This is not 3, this should be 5. I hope umetumia 5. I hope you have used 5. Kindly. I wrote 3 by mistake. So give me the balance carried down. So that one comes to 21,800. 21, 8, 30, 35 or 32. So I want to break the variation there, 832 or 835. So then see where another break because we need when you can tofauti na huo mwingine, so a different person. Ibrahim 32.5. So your balancing figure is the cost of goods you sold. So out of this, the balancing figure is the cost of the goods you sold out of it. The balancing figure here. So take that side minus this side. How much? So thank you. That is it for 10, that one. Wewe ukipata dependent, that is the approach. That is the approach. So write for me there, autonomous branches. Autonomous branches. But the class comes to an end there now. Autonomous branches are also known as independent. Independent branches. I've shared with you the notes. Nimewatumia notes, 1 page only. Write those notes before our class on Thursday. Before our class on Thursday. Yes. Before our class on Thursday. So on Thursday, tutaintroduce hiyo. Tufanye ikataa kuisha. Anzia hiyo siku nyingine Friday. Ndio tuanze partnership. Otherwise, thank you for creating time to come. I know Sunday is a busy day. Did you have a class in the morning or you have another class after this? Because I remember some people yesterday, ama the other day, muliniambia kuna. Oh, okay, sawa basi. So mpumzike. Please read. Hakuna time ya ati tutafanya thorough revision. Revision ni tunafanya. Tukifanya swali ya kwanza hiyo ni teaching, hiyo ingine ni revision. So there is no time. Time imeisha. So just keep on reading. Otherwise, thank you. Let's meet in our next class.